Greetings, true believers.
Welcome back to the channel. We have to talk about Palantir because the stock has slid to some ridiculously cheap levels. The CEO went to my high school, so if anyone can predict this stock, it's gotta be me.
Just kidding.
Joking, I'm only bringing in the facts for this video. If you appreciate me jumping straight into the video, you can gently and kindly smash that like button. It's free and it helps out the YouTube algorithm so more people understand why I believe Palantir is undervalued. Palantir has been public for over 1 year. 12 months ago, the stock was over $30 per share. The business isn't profitable yet, posting a $512 million net loss over the trailing 12 months. However, this is primarily due to large share-based compensation packages paid to attract and retain employees. That's the same strategy Amazon uses to retain the most talented employees in the world. The business itself is generating positive free cash flow with $320 million reported for the first 3 quarters of 2021. That's a massive year-over-year change from negative $285 million in the prior year period. Palantir's sales process includes little profit and often losses when establishing a relationship with a customer. It begins making money later on once customers rely more heavily on Palantir's software for their operations. So its book of business should become increasingly profitable as it matures. If you had 10 of the most talented basketball players that were in high school but were all 7 foot tall and were being scouted for the NBA, would you have any worries about one of them becoming an NBA player? That's literally how I feel about Palantir stock. They aren't crushing it in numbers currently because they're developing the business and building relationships. It only takes 1 or 2 out of the 10 of these 7-foot high school prodigies to make millions once they get drafted to play in the NBA. Palantir's success is very similar. It's a long tail event. What I mean by that is that it will take time, but once Wall Street sees that they're delivering big profits and growing relationships, they're going to bid up the stock fast. Palantir is a popular name amongst retail investors who own most of its shares compared to just 35% ownership by institutions and hedge funds. The big guys have all of the money though. Hedge funds and institutions, once they see profitability, which is only in a matter of a few earnings quarters, will regret not buying the stock under $20 per share. Palantir stock has continued to slide early in February's trading. The company's share price is down roughly 10% in the month so far, and it's likely that Meta Platforms' shocking 4th quarter results and guidance was a major catalyst in this pullback. Meta published Q4 earnings on February 2nd that arrived with worse than expected earnings and soft guidance that shook the market. The company's market capitalization plunged roughly $230 billion in the next day of trading, and the earnings release prompted sell-offs across the entire market. Amazon published better than expected Q4 results the following day and helped ease market anxieties, but lumpy performance this earnings season has been playing a significant role in market volatility. Palantir is set to release its own 4th quarter results before the market opens on February 17th, and the release is likely to be a big one for investors. With its last update, Palantir guided for sales growth of roughly 30% year over year in Q4, $418 million in revenue, and non-GAAP operating margin of 22%. For the full year, the company expects sales to increase 40% year over year to reach $1.53 billion, and it also anticipates adjusted free cash flow of more than $400 million. Unlike Netflix and Meta, which has very high expectations and sell off if anything comes short, Palantir has the opposite. It's been selling off so much and the expectations are low. That's a recipe for success and why I believe short term this stock can swing to $20 per share again. Palantir also extended its partnership with Ferrari to bring data-driven performance decisions to race operations. I see Palantir only winning and maintaining contracts. Eventually, the big guys will want to get in. What is likely happening is Wall Street sees too much risk. Wall Street is notorious for being very short-term minded. They always put pressure on a company to report great earnings regardless of where the company is in its growth cycle. Sure, for Apple, this thinking makes sense. They are mature, and if they grow less than expected, fine, have the stock sell off. But an early stage, high growth company like Palantir should be able to lose money as long as they're building a strong long-term foundation. The stock market ran hot in early 2021, pushing a lot of companies to silly valuations. Palantir was no exception. Its price to sales ratio routinely went above 30 and occasionally beyond 40. Super rich valuations set a high bar for a stock. often leading to sharp corrections on things like a less than perfect earnings report. That makes sense, and when Palantir fell to the low 20s per share, I believe it was justified. However, now things just don't make any sense. It's like a dog meowing. You got to scratch your head and really think about it. I like to analyze uncommon opportunities like this. The more misunderstanding, the more opportunity. That's what I did with a lot of trades in the Discord and beat the market 11 out of 12 of the last months. I do the opposite of what the herd does, and I use options to magnify my returns on top of that. If you want all my buys, sells, and portfolio access, the first link in my description is an application for a free call to see if it's a fit. For Palantir, there's just no room for error and no margin of safety from shareholders. But if you ignore the short-term volatility, you are likely to get paid for the risk. The stock has now fallen more than 60% from its 52-week high, presenting a much more reasonable entry point for long-term investors. The stock's price to sales ratio is below 20, its lowest since the initial weeks following its market debut and IPO. Now, investors have the opportunity to buy the stock at a valuation that could allow its growth and share price to rise together over the coming years. Palantir should be a rewarding investment if management can hit that 30% growth target, expand its public and private sector reach, and continue moving towards profitability. This coming earnings are going to be very interesting and have a significant influence on the stock. Whether the stock rises is hard to say because any short-term prediction is pretty much a coin flip. But I'm very confident long-term, each earnings that comes out, it will only grow the share price further because Palantir is increasing revenues, it's increasing cash flows, and the profitability factor will continue to move higher. It's only a matter of time until we see huge profitability come in and Wall Street have that little fire in their belly getting excited about this stock again, and that's what's going to push the stock higher and bigger valuations fast. Now, there's no saying when that can happen, but when it does, I can expect this stock to go up 30, 40, and even 50% in a single quarter given good earnings. Whether it happens this quarter, the following quarter, or in 2022, that's going to be a key factor I'm going to look at for Palantir stock, along with any big news events of them creating relationships with other partners. Management is very smart and knows exactly what they're doing. How are you planning on playing Palantir earnings? Let me know in the comments section and check out my option playlist if you're bullish. You may want to buy some call options.